Santiago. I run a family office now. Before this, I was at Verify. Been lucky to have discovered crypto and still here. 2 years in investment banking. Then I did a little over 2 years at this growth equity fund. And that really drew me to Ethereum because it coincided when Ethereum launched and we were investing in open source software. And at the time, it was like we made some early bets. And that was like very instrumental in my thinking. Like you can actually monetize open source. I would say the thing that probably helped me the most was like, what I say now has taken me many, many years to crystallize. And what I'm saying now is sort of in this moment of time, informed by many mistakes. I'll start by saying, I think we glorify success. And I think we're living in a moment in time where most people are lonely. And probably is because you look at your phone and you're comparing yourself at a global scale in real time constantly. That wasn't the case for other generations. And I think, there's two kinds of people. One that tries to learn from the success of others and other people that can't stand the success of others. I think ultimately it's this idea of understanding that like we glorify success, but I think we should be spending more time in how people get there. And it's this concept of the things you can control and the things that you can't control and fall outside your control.
Right.
There's always this sort of desire to control. But if you sort of like take a more fluid dynamic of it and say, hey, I actually don't control many things. And if you can live with that, if you can adapt to that, I think life becomes easier. And the reason why I say this and I'm public about it is because that is...
So why are you still here?
Very clearly, I think money is the densest form of energy, and I am of the mind that most people don't know how to allocate it correctly. And I think that I can do a better job at doing that. What motivates me is I want to continue to make more money to invest it in areas that are neglected. And when there is like transformational technology, I think you have to let go of certain concepts and allow yourself to kind of take the other position of saying.
First, here in Singapore with Santiago. Can you introduce yourself? Who are you? What do you do?
Of course, great pronunciation. Before this, you were mentioning that you live in Mexico, which is a country that I grew up in. Yeah, you rolling the R and stuff. Yeah, it's just great. Santiago. I run a family office now. Before this, I was at Verify with my partner Ben, and we're very much in DeFi. And so, been lucky to have discovered crypto and still here.
Excellent. So before the camera started rolling, we were talking about like how you keep the score in crypto. And that's an interesting concept to me because kind of when we start playing a game, and if you think about crypto as a game, we often talk about like what the rules are of the game, what the rules of the game are first. And you were talking about how you personally keep scoring crypto and how you think about that kind of game. And I'd love for you to touch on that a little bit. Like, what do you think of, I guess, what for you is the trajectory of like the game, and how do you keep score within the crypto game personally?
Yeah. Well, first of all, I'd like to say, what I say now has taken me many, many years to crystallize, and what I may be saying now will probably, hopefully changes over the next 5-10 years of my career. But it's predicated on like just many mistakes and just an evolution of my thinking. So hopefully I'm happy to go back and what I'm saying now is sort of in this moment of time, informed by many mistakes. I'll start by saying like you're playing a game, and I think you always want to understand what game you're playing, and have that clear in your mind. And I think it's a single player game. Like certainly the markets are, multiplayer. It's sort of the masses collectively telling you if you're right or wrong constantly.
Right.
But your question around what is the score, I think in my evolution in my career has really changed. And it's changed from being very much focused on, not just the market telling you you're right. Like, hey, did you do a good investment? Did you make money or lose money? That could be one score for people. When I think about score now, it's more informed by other things beyond, are you making money or not? Are you outperforming the benchmark or not? It's, am I sticking to core principles and values? Is the process correct? And so I think earlier on in my career, I would have told you it's very much focused on that. Are you outperforming? Are you making money or not?
Right.
Because investing is great. Like the validation is sort of immediate validation in the market, similar to school, right? You study, you either get an A or you get a C, and that's really good. The problem is that sometimes it's not as crystal clear because your time frame as an investor might be 10 years. So you might be wrong for 8 years of those 10, but in year 8 to 10, you were very right. And so to think about like if you're early in Solana, you would have outperformed vastly for 5 years or like 3 years, and then it launched and then it got and so like things are not linear. And so I think the score is in sports, it's like you have 45 minutes or 90 minutes in a soccer match, or 4 quarters in an NFL match, and But in investing, everyone has a different time frame. And so I think for me, the score is, am I in a good spot mentally, emotionally? I think investing is a very psychological sport. And so it's hard to quantify, but I think I've gotten comfortable around it's not as easily quantifiable. And I'm playing my game. Others are playing different games, and I'm okay with that. And I'm less interested in, am I impressing other people? I'm obviously interested in outperforming and being right, but I think there's other dimensions around how I think about and track the score.
Right.
If that makes sense.
Yeah, absolutely. And I think part of that too is kind of endurance, because being in Singapore, talking to people who have achieved success, you'll talk to even people who it feels like they've come to the forefront in the last like year or so, and then you find that they've been in the space since 2014 or something.
Yeah.
So you need to spend, in most cases, you need to spend a long time in the space to achieve kind of this like, dynasty. They talk about generational wealth or this like real success. And to be, if you assume that you're going to spend several years at least in the space to achieve success, you need to like be capable of mentally enduring several years in this space, because it is stressful. How do you manage that component?
Well, what is success?
That's a great question. I think most people in crypto talk about it as like a strictly financial game. It's just like points.
I was having a conversation with, and I always like to come to conferences and engage with people that are perhaps earlier in their crypto journey or investing journey.
Right.
Because it helps me, it reminds me so much and gives me, it's sort of a mirror into a particular version of me 5 or 10 years ago. Look, there's clearly like financial freedom that I think everyone can aspire to. Like, you want to be in a position where you can own your time, where you don't have to be forced into a decision. You have that luxury of taking your time. I think that to me is like true success, where you can take your time to make a decision. You can defer judgment. You don't have to, you don't have to act because the market is telling you something, or you're about to be liquidated, or you have to go to a job. But I think success can mean many different things. And there's a great book that I just read, Never Enough by Andrew Wilkinson. He became a billionaire, he went from nothing. And then I've like maniacally listened to like 100 episodes of Founders, which is a great podcast. And I think it's like Charlie Munger and others have said, look, the best way to learn is just by studying biographies or autobiographies. And I think we glorify success. The people that, are highly successful in sports or investing. And I think it's more important. We should be focusing more on like the actual making of success, because I think the hallmark of most people is there's traumas in that. There's other people that were involved in that evolution. And then also like most people face near-death experiences. And I think the common denominator is where you're just there, where you're surviving, where you like, you talk about endurance, it's more of a marathon, right? And I think I love sports. I learn so much from sports. And in running, there's this idea of like zone 2 training, which is you have to go slow to go far and to go fast. But it's not intuitive, right? Because you start running, you imagine you want to train for a marathon.
Right.
Most people get injured. Why do they get injured? Because intuitively you're like, if I'm going to run, 26 miles, what do I need to do? I'm running 1 mile. And then you say, well, I got to keep running longer. And then I want to run faster. And you never really like give your body time to rest. And as also you see it in weightlifting too. You can't always go higher and higher on the weight. Like you have to like break the routine to help your muscles rebuild, to prevent injury. And this is, again, go back to it, and I'll close, just what is success? What are you optimizing for? Are you a sprinter? Are you a marathoner? Is there a number? The last thing I'll say is I had a number coming in. I think everyone does. Everyone has a specific figure in mind.
Right.
I think money is amazing. Anyone that doesn't tell you that, I think, is kidding themselves. I'm actually deeply skeptical of people that somehow abscond the greatness that there's nothing wrong with trying to acquire wealth. Why are you doing it? There's nothing wrong if you want to go buy a particular luxury good, or if you love watches, if you love cars. Like, life is really short. If you want, and I think we're living in a moment in time where most people are lonely. And probably is because you look at your phone and you're comparing yourself at a global scale in real time constantly. That wasn't the case for other generations. It was very much localized. That has positives and negatives. Why? Because you understand how competitive it is. And I get excited about that. You now can compare yourself against people that are in the market or have, a 15-year-old kid that is a great trader or a great builder. And I think, there's two kinds of people. One that tries to learn from the success of others, and other people that, and I think it's the vast majority of people that can't stand the success of others and think in more zero-sum mindset. I think technology is abundant, the world is abundant. And so you want to learn from other people and celebrate the success of others. But I think ultimately, it's this idea of, being at peace in your trajectory, how you get there, and understanding that like we glorify success, but I think we should be spending more time in how people get there, and that it's not clear cut, and just,
Right. There's this kind of concept of social games that people talk about that aren't necessarily related to financial games. In crypto, maybe they are a little bit, because we talk about things like deal flow or, mind share, stuff like that. You are at the point, you're one of the most prolific investors in the space. You're at the point where you probably don't need to play social games, but you still, put yourself out there. You're just coming off the breakpoint stage debating Solana against Ethereum. You're constantly on podcasts. You're constantly on Twitter. Why do you continue to play the social games?
My dad asked me this question. And I told him, like, what is the thing that you hear me repeat time and time again in podcasts? And he said, well, thinking probabilities. I'm like, yes, but there's a deeper thing that you always hear me say.
Mm-hmm.
And it's this concept of, I think it's very important to know the things you can control and the things that you can't control and fall outside your control.
Right.
Because life is messy. The uncertainty of life can be daunting. And I think humans try to cope with that uncertainty in different ways. The more, I think in my evolution, the more comfortable that you can get around, there are certain things there's always this sort of desire to control, because it feels easier to think in binary terms. It feels easier to tell you you're either going to heaven or hell. And religion is kind of like the more pure kind of version of this. Like,
right.
And most people like religion for this reason. But if you sort of like take a more fluid dynamic approach and say, hey, I actually don't control many things. And if you can live with that, if you can tolerate risk and look at it head on and just sort of adapt to that, I think life becomes easier. It's messier, but I think it becomes easier. And so the reason why I say this and I'm public about it is because that is my weakest part. I think and the more I say it publicly, I stake it. And I remind myself of the things that in moments in my life I can gravitate to trying to control things.
Right.
And I think the best therapy for me is to open source my brain, to publicly stake things. Because investing is, again, very psychological, and it could be tough. It's tough. It's not easy. It doesn't get easier. Your portfolio grows, and there's more at stake. Or other people depend on you, or you're employing people. And so back to something that I wanted to emphasize is, I think getting to that number is very important, but I think it is equally or more important to understand why you want to get there and understand what your identity is, because it's not tied to a particular number. Like, what makes Jack Jack? Is it getting to a number? Is it the fact that you are dedicating your life to something that you're passionate about? Is it just your work? Is it dictated by the price of Bitcoin and Ethereum? Or is it the fact that, said differently, 99% of the times, if you ask people that sit in this chair what their identity is, they'll oftentimes likely describe it in a completely different way than if you were to survey their 20 closest friends and family. And I think you're oftentimes hear people say, oh, I have been very successful. I've worked here. I've done this in my career. And it's all very much job success in the very easy way to describe success.
Right.
Whereas if you ask your parents or you ask your friends or your wife or your partner, they'll probably say totally unrelated to the fact, have you been like successful getting to the number? It'd be like, Jack is a very kind person. He's smart. He's inquisitive. And it has nothing to do with the number.
And I bet in a lot of cases, they couldn't even tell you like the number, it's
Absolutely
like completely
not.
internal.
My dad told me this because my parents gave me money early on, but a very small amount to invest in crypto, which, ended up being not small. And I didn't absolutely time the top, and I felt like a failure. And my dad just sat me down and said, listen, you got to go to therapy. And I'm a big fan of therapy. I've done it before. And, you know, I think everyone should allow themselves to have someone in their life that they can share things for me, or share with. And he said, listen, I'm not going to love you more or less if you make me more money. First of all, I gave you that money thinking that without any expectation. And second of all, it is irrelevant for me. And I think it's just deeply rooted in insecurity of in the evolution of trying to discover who you are. It's very easy to just say, oh, I'm a millionaire or a billionaire, or I'm a leader in a particular industry, whatever that is. These qualifiers are so easy to come up with. Whereas I think it's okay to maybe just take a minute to describe who you are, as opposed to just putting like a badge to who you are. Oh, Jack, I've achieved X. Oh, fine, great. I went to Harvard. Check. Okay, I got an Ivy League education. I have more than $1 million. Okay, great. So you just sort of, it's easier to define, but it will not fill the void.
Right.
And no matter what, I've had the privilege of meeting highly successful people outside of crypto as well. And from the outside in, you would think these people should have absolutely no problem. They should be living life, enjoying it. They don't have to think about anything. They're set for life from the outside in. But deeply inside, they're very insecure. They're trying to fill voids with material stuff or with other things. And I sort of go read Andrew Wilkinson's book, Never Enough. And same thing, you know, it's like a recurring theme. And again, it goes back to the opening question, like, what is success? What game are you playing? How do you keep score?
Absolutely. And yeah, you know, I have spent a lot of time in Mexico. Obviously, like, you know, being poor is not great. However, it's really bad. However, you know, if you have had the fortune in your life to like reach a certain benchmark that you put yourself, maybe it's even 100K, you realize like a week later, you know, you're completely, you know, emotionally the exact same way.
Emotionally numb.
Or a marathon, right? I want to break 3 hours in the marathon. You break 3 hours, you feel great about it. It's a phenomenal day. But then, you know, a month later, you're trying to break 250 or something. Like there's no one thing that is ever going to cure you. So given that idea that you're saying, like, why are you still here? You know, financially, you know, I don't know, but I think a lot of people would argue you financially made it.
I don't have to work a day in my life.
So why are you still here?
Very clearly, I think money is the densest form of energy. And I am of the mind that most people don't know how to allocate it correctly. And I think that I can do a better job at doing that. And so it is a coordination problem. You hear Peter Thiel say, we haven't innovated in certain pockets. The world of atoms hasn't innovated. You know, we don't, nuclear is still out of favor. You need someone like Elon Musk to fund space exploration because most funds or most governments don't want to do it. And so I think that is just what motivates me is I want to continue to make more money to invest it in areas that are neglected. And I have a couple of ideas. Like crypto is one of those out of favor, but industries. But nuclear, like there's no reason why is nuclear not, you know, the primary source of energy for the world?
Right.
Why haven't we, and I appreciate it's not perfect, but we haven't invested any amount relative to like solar and other unsustainable forms of energy. But like why haven't we invested more energy and resources into small modular reactors, like thorium-based reactors? Like why? Like if you have $1 billion, in what version of this world, and I live in Monaco, I stare outside my balcony and there's like, in what version of this world did you think that spending $330 million on a boat was a better investment than giving money to a researcher?
Right.
And it's informed by, before crypto, I spent, so I love healthcare. And I invested in, that ended up working at this company that was studying aging before Brian Johnson's of the world. Like,
right.
And when I was there, it was very instructive because I had the chance to interact with, you know, a scientific advisory panel of like 8 Nobel laureates, leaders in their field. And you would think that these people would have no problem getting funding. And it's far from the truth. They, even at the peak of their discipline, profession, they can't get enough funding from the NIH. And then you say, well, how many PhD students, how many researchers can't get enough funding? And it's a coordination problem. And I'm actually, someone asked me the other day, like, because I have this growing desire to maybe come out of my, you know, of just doing investing. I was like, I'm kind of bored. And so I'm like, if I were to do something, and I will do this, is I want to create an entity that can warehouse human capital, researchers that need funding, and just give and raise money from people that are like-minded and have this sort of vision, which is let's go out and sequence the microbiome. Let's go out and fund nuclear. And it's not going to be in the format of an traditional asset allocator, like a 10-year fund or a hedge fund. I think you need a more creative, but look, if you take what crypto is really good at, which is capital formation at scale and better coordination. 2 seconds, the microbiome. We need to sequence it. 90% nutrient absorption happens in the microbiome. We can't personalize a probiotic. Most autism or mental disorders, like metabolic disorders like obesity and whatnot, are because there's dysbiosis. The gut changes rapidly. We are at a point where we can computationally sequence it, but there's a ton of variety. You're going back to Mexico. If I take a sample, like a shit sample today, it's going to be very different than when you're back in Mexico.
Right.
And so you need to do longitudinal. So you need to collect, basically, you need to go and say, Jack, I need to collect your shit over the next year.
Right.
And you need to give it to me every month. Well, if I wanted to do that, I need to raise a ton of money because it costs anywhere from $20,000 to $50,000 to do that. But what if I told you, hey, I'm going to give you a token, but maybe you can share part of that cost in the same way that, DeepN has done that. Bitcoin miners are fronting the CapEx themselves.
Shit to earn. You've heard it here.
So basically, yeah, I'm going to create the shitcoin. but this is something that I'm very excited. At a personal level, I think everyone has someone in their family that suffers from, some sort of health condition. And look, that might be the greatest contribution of crypto. It's just an operating system to do things better. So why am I doing here? Because I think we are not even we're scratching the surface of the things that we like. What can we actually do? We've only focused on a very particular use case, which is finance, huge market, whatever. But I'm actually more excited about, okay, how can you take an existing business, layer in some crypto elements to it and totally transform it?
Right.
You make it more economically viable. You actually can transcend certain friction points. And one thing that I believe in is as soon as you remove friction from a particular system, it's like you let the water flow through it. And there is just non-linear return, not just returns, but like outcomes attached to that. And crypto is that. Like, I think we should consider ourselves extremely lucky to have discovered this technology at the right time, I think, because it is a better coordination mechanism and the world is very connected, but it's not necessarily better coordinated because there is friction. In finance, there's friction in healthcare. It's an incentive problem. Healthcare is not evil. It's just that when it costs $1 billion to get FDA approval for a drug, you're going to prioritize the next dick pill versus a molecule for a rare disease.
Right. Or even a treatment that doesn't cost money because it's not as monetizable.
Correct.
Yeah. So your kind of framework around this is like, I'm good at allocating capital in this industry. I believe that this industry is also a platform which the future of businesses will be built on this platform. So I continue to participate in the industry, not necessarily to gain wealth, but because if I continue to amass wealth, then I can direct it into this industry, into the places that kind of I deem deserve investment.
I'm going to be a better router of capital.
Right.
And also, I also think that some of the smartest people in the world just need a good home. And it may not be an institution. It just needs to be perhaps an independent entity that says, here's a more flexible, unlimited budget. Go out and think and go out and build.
So I want to go all the way back to the beginning of your crypto journey. I know you were very early on. You started to think about crypto, started to observe crypto. How did you arrive at crypto, and what was that like?
I had the good. I was quite lucky, but I had taken game theory courses in school, and so when I discovered the Bitcoin white paper, I was at JP Morgan, kind of 3 a.m, waiting for IPO pitch deck to be printed, and I stumbled on our Bitcoin channel and Reddit, and downloaded the white paper, read it, and it was just like someone had whacked me. It's like when someone delivers a key insight, it's so obvious, and that's a hallmark of a key insight. I couldn't tell you what those are, but as soon as someone drops a truth bomb on you, you're like, you can't think. It's like you can't look back.
Right.
And it was like, why did it take me this long to realize this? And so truly, like when you read the Nakamoto consensus, it is a new chapter of game theory. You're optimizing a payoff, this prisoner's Byzantium general problem. And so that was, for me, Perhaps if I hadn't taken a Bitcoin, like a game theory course, it would have been, maybe would have discredited. And then I decided for me, it was, I approached my first investment in a Bitcoin as I don't have much to lose. I was a year in and I was JP Morgan analyst. You get paid decently well.
Right.
You get paid a bonus. And I was like, oh, if I lose my bonus, I get paid a bonus the next year. And then I inverted and said, okay, what is, I think for me, it was I need to have some skin in the game to track this, to learn about this, to be motivated and incentivized. And so I said, okay, what does a semester cost? Private institution in the US is like 25, 50K. I don't know. It's really expensive. So I invested that amount of money. It's like, this is a semester long course, but I need to put some money, some skin in the game to be invested. And so that was how I first did it. And that was my first introduction to it. So again, I was quite lucky because Bitcoin had come down a lot and, and then, I just kind of stuck to it.
So despite kind of coming on to crypto early and investing early, you continued to work in investment banking, and then you you worked at this health startup you mentioned.
Before that, I 2 years in investment banking. Then I did a little over 2 years at this growth equity fund. And that really drew me to Ethereum because it coincided when Ethereum launched, and we were investing in open source software. And it was at a time where most venture capitalists, like, it's kind of like hard to wrap your head around, like, how do you monetize something that is inherently open source and, free?
Right.
But at the time, it was like we made some early bets, and that was like very instrumental in my thinking. Like, you can actually monetize open source. It has issues around continuity and monetization. Like Linux, like Thorvaldus Linux is not a billionaire. Tim Berners-Lee is not a billionaire. Like, open source has always so that to me was like very formative and instrumental in like clarifying, and have an article about like why open source wins, but open source with crypto properties, because finally crypto allows you to tokenize contributions and map contributions to outcomes. And so the internet didn't allow you to that. And I think that was like, that was pretty instrumental for my understanding of, and even to this day, like, I became less interested in Bitcoin as much as growing up in Mexico. You appreciate remittances, you appreciate, the kind of escape hatch from, monetary regimes and inflation. Right. I still have a deep appreciation for Bitcoin, but it's just not for me. I am more interested in, something like a smart contracting platform to, like, basically open source on steroids. And so that was SageView Capital. I left. I worked at this startup, but I'd been investing just personal money. Some of my parents, just like 25K, my parents' money, but it was mostly my money. And I felt that, look, if I lose it, it's my money. It carries a ton of risk. But I think I'm like probably. You've seen that documentary Free Solo where Alex has his brain, like, he doesn't feel fear.
Right.
I have a risk tolerance that I wouldn't. Like, I don't want to give any advice because I would caution like most people. I started doing SPVs and inviting people that said. But it was only in things that I had a big allocation in. And I just kind of made a name for myself slowly of just investing and helping teams.
Do you think the IB background and then the venture background was instrumental in your crypto success in investing later on? And if so, how?
Yes. I think the work ethic that you get from investment banking is like bar none. And I oftentimes see people that less experienced, even builders and investors, and there's something just about the grind,
right,
that is the work ethic around that. But really, SageView helped me so much in my evolution as an investor. Again, going back to this idea of things you can control and you can't control. Investment banking, you're pitching to a client 100 ideas, and you do a lot of work. And my first week at SageView, the founder walks into my office. He's leaving. He's like, "What are you still doing here?" I'm like, "Well, what do you mean? Like, I need to work." He's like, "We don't get paid to do work. We get paid to be right." So just make sure that happens. If it takes you 100 hours a week, great. If it takes you 20, I don't care.
Right.
And it was like a key insight for me. It was very liberating to hear that. And the process that SageView had, I was very lucky. It was just a small firm in terms of people, but a lot not in capital. And it was not so much around when you build a model, you build a thesis for a startup. Their approach and their MO that was sort of ingrained in my brain was, you can really only focus, like, they would really push you in committee. Like, what's the thing that's going to make or break this investment? It's one, maybe two, maybe three, no more than that. What is it? And it was just like, it was like really drilling that into and I think that's generally true. Like, And it was like, we're going to either make a lot of money or we're going to lose our shirts because of this. And by the way, that might change over time.
Mm-hmm.
And so you think in probabilities, right? You build a model, the model's wrong, but it reasonably approximates asymptotically. Like you either say, well, this software company is going to be able to, like Uber's going to be big because of X or Y. But, and then if you have very clear what that your hypothesis is, it's only a hypothesis and you should be testing it constantly. And if you're not doing that, then you're like a maximalist. And you're probably going to lose your shirt, right? The nice thing about crypto is that it is sort of this liquid venture asset class that allows you to come in and out of a position. So you might say today, in this moment in time, Solana is going to flip Ethereum. It's across a number of facets. It's getting escape velocity in consumer applications like Deepin. You're also seeing it with Helium. But there's parts of my brain that I'm like, if I see the inverse of that or other things, I might very quickly change my mind and say, hey, the next high throughput blockchain is actually going to be better than Solana. So it's important to, I guess I would say that that was really critical in my formation of how to think about investing, like thinking in probabilities and focusing on like the one or two things that I think you can control. And especially if you're working with a founder, you're working with a company, and the MO of SageBee was like a private equity approach, like really going in. It's founded by KKR people and the private equity fund. It was like going in and helping founders scale. And it was like, we're going to go in, and the problem with this company is a great product, but they have a terrible sales organization. So we're going to go in and just fix that. And if we fix that, it's going to go from 20 million ARR to 200 million ARR. And if it doesn't, then we're going to lose our money. But that's the focus.
What about kind of some of the more granular stuff that has to do with like raising capital or managing capital, managing risk, managing a portfolio?
Yeah. I'm very glad that I didn't like jump into that because I generally consider myself quite lucky to have discovered, like, this asset class went from being like, I remember having a whiteboard in my office at SageBee. It was like, oh, this is like $100 million asset class. Like if it gets to $1 billion, it'll be like great, like amazing. Right. The biggest mistakes I did is not re-underwriting that thesis. Is if it can get to $1 billion, well, can it get to $1 trillion? And if it gets to $1 trillion, can it get to 10 trillion? And if it gets to 10 trillion, well, how big can this be? And the re-underwriting aspect of it is really important. But so having made those mistakes with a smaller scale, thinking about security, thinking about managing risk, thinking about allocation. So one of the things that I think about more and more now that I didn't focus on as much before is how do you size a position? Because the thesis can be right. It's not sized correctly. It doesn't matter. Because again, power law distribution. So if you were right about an investment, but you didn't size it correctly, like you need to be right in a very meaningful way in one or two things that is going to drive most of your returns. And if you didn't size that correctly, it doesn't matter. So I'm glad that I had the opportunity to, like, I did some like SPVs to just kind of like get a feeling for how to manage the people that are investing in the SPV. It's more lightweight. You're not like an active manager, right? But you do get a feeling of like what their relationship is. And then I was always cautious to jump head on to manage money in a traditional fund context. And I was very lucky to have found Ben through an introduction of Bain Capital. It's an investor in Verify. And they said, I think you guys would bond well together. He had a very similar background as I did. He worked at KKR. SageBee was, for all intents and purposes, started by KKR people. So we shared a lot of common ideas, and it's really nice to, so now I'm like, in family office, it's just me, right? I like to do most of the diligence. It's my money. So I talk to founders, I make the decision. But it was very nice to have met and worked with Ben because we were very much of the mind that like DeFi was going to be huge, and we were very aligned in certain things, but we also had different skill sets and different roles, and it was a very healthy dialogue. I guess the thing that mattered the most, and I think I would attribute most of the success, Ben, if he's listening, he might say otherwise and think I'm crazy, but it was because I felt Ben has been one of the persons that I've felt most comfortable disagreeing with. And I think naturally as humans, we tend to want to come to consensus very quickly because we shy away from difficult conversations. Right. But I think investing is a truth-seeking business. If you wanna find the truth, I think you're gonna trigger people. You're gonna face criticism. And I think with Ben, it was like we would be able to and get comfort. It was a deep mutual understanding that we were attacking each other's ideas, not identity. And sometimes when you have a disagreement with someone, they're like, they get offended. I'm like, you shouldn't get offended because I care about you. And so therefore we should be disagreeing more often. We should be having difficult conversations. So when I was growing up, I thought my parents would get divorced because they would fight a lot. And my mom said, listen, they sat me down. I had like this trauma. They sat me down and said, you should be worried when we stop fighting, because when you stop fighting, you stop caring. But we fight because we care for each other. And I relate it now to the relationship that I had with Ben. Like we would have this healthy disagreements and we were very comfortable doing that.
Right. Yeah. And it's almost like you don't necessarily need to like have compatibility on theses or ideologies, but it's more of like the soft compatibility and how you're engaging with each other and creating a sounding board. And that creates the effective results more than like having someone you agree with or having someone who, you know, you're super, you have the same theses.
And valuing independent analysis too. Because again, we there's a natural tendency and bias to come to consensus really quickly. So one of the focuses of like, if we're going to talk to a team, you know, it's just one analyst. For instance, if I'm because I started observing, if I'm on the call and the analyst is leading the questions, if I ask one question, the analyst knows me well enough that just by the intonation of my voice, my line of questioning, he might very quickly, consciously or subconsciously, perceive me as being very inclined to make an investment or not very inclined. And that is going to influence his decision-making process. And so if you silo that out as much as possible, is incredibly important, because you want to be hiring people that are smarter, that can own their own diligence and have agency and accountability around that. And then, yeah, of course, have committee and have a healthy debate. But I think oftentimes, like in an organization, you try to do that debate prematurely. And I think there's value in having independent analysis that people like in a sort of like siloed way, and then value that independent thing. It's like in open source systems, right? The information is closest to the edge, and you want to really listen to that in an untampered manner as much as possible, lower hierarchy, empower kind of the edge of the nodes to surface really good information. And open source systems are really good at surfacing information. And the more hierarchy you have, that quality of the information degrades. And so if I were to build an investment firm again, it'd be very like semi-autonomous unit. It's like if you hire a smart person, I'm actually giving money to 2 people to kind of run pods. Right. And they're competing against each other, but they're also working with each other, but they're managing their own money. And so, yeah, it's
wow. So maybe, you know, pre-2020 is actually your most relatable period of investing in crypto for the average kind of like, because you were really a retail investor up until that point.
Yeah.
How did you scale your portfolio during that time?
I mean, crypto was very retail. Like ICOs were a retail phenomenon. Like you know, it doesn't matter if you were a fund, like you were investing in the ICO, like it's retail. How did I scale my portfolio? I guess just investing in a number of projects and being reasonably early in Bitcoin, reasonably early in Ethereum. Certainly was reasonably early in a lot of projects that weren't successful. Golem, MateSafe, and a bunch of others. I would say it was the thing that probably helped me the most was like just making a name for myself as someone that was not getting in the way, not being like value extractive, but just more helpful to teams. And I think my first encounter with that was with Synthetix. It was Haven, and then it pivoted, and I just became close with the team. And they went through a pretty rocky evolution from Haven to, you know, Synthetix and that pivot. And I just became really close with the team, and it was very rewarding. I was with Kane yesterday. Like I've invested in his brother's company. I'm investing in his new company. And I think there is that the value of these relationships has been super applicable. It was applicable at Parify when we were investing in DeFi. Like if you didn't have a good relationship with the small group of DeFi builders, you're not going to get a call.
Right.
You're not going to get and it matters if you're the first check or the 10th check. And so, yeah.
At that point, would you say you were kind of like executing on a venture adjacent strategy just as a retail investor in liquid token?
Yeah, at Parify?
No. When you were kind of investing pre-2020.
Oh, well, because most of these were tokens, like this was something that I had to adjust my thinking around, because I invested in like these things thinking, oh, it's set it and forget it, 10 years. But if you're not prepared for what your brain and what you will go through, and you don't have like an exit strategy, a risk management strategy, when you do a 10 or 100x, nothing prepares you for that. And traditional venture capitalists don't have to deal with this problem because your company either startup either gets acquired or goes through an IPO.
Right.
Perfect. But, you know, in crypto, that's not the case. And so Ethereum goes from 50 cents to $20. Vitalik sells, you know, the DAO hack, like what's going, you know what I mean? Like,
Yeah.
there is an opportunity to do so many, and I did so many mistakes, right? And so it was the recalibration. So your original question was, how much did my investment banking and venture capitalist training help me? A lot, but it was also, there's equal value, I think I've learned now, looking back, of letting go of certain concepts. And I've observed this perhaps coming from you know, when you talk to a lot of people in finance and have knowledge about order books and you pitch them like Uniswap, like an AMM, and they're like, this doesn't make any sense.
Mm-hmm.
It's just not as, like a Uniswap and an AMM will never beat a centralized order book model in efficiency. And you're like, yes, I agree. But can you also appreciate that an AMM allows price discovery for a tail end of assets, that it allows people, retail, to be their own market maker or a market maker and provide liquidity and earn fees? And if you're earning fees, it could be a good strategy to cost in an average out of a position. Like, is that not value? And so I think a lot of times I've observed, and I've made this mistake as well, you know, when there is like transformational technology, I think you have to let go of certain concepts and allow yourself to kind of take the other position of saying, why might this be successful? And is there a market for that? Is there a need for that? I would argue like 9 out of 10 times there isn't. And a lot of times crypto founders, this is probably the most common mistake of crypto founders. They're like trying to create a solution for a problem that doesn't exist
Mm-hmm.
or doesn't exist today. And sort of like being too early is indistinguishable from being wrong.
Right.
But it's, yeah, I think it's having a healthy, again, if you think in probabilities, you allow yourself to take the opposite view and say, okay, is there a market for this? Is there a audience that might appreciate this? Because sometimes you take a very heliocentric approach to investing, which is, if I'm not going to use it, then I don't see anyone else using it. But this is quite common in Western investors, right? That they don't really appreciate that finance is very broken. And you kind of appreciate that if you go to places like Mexico.
Right.
As soon as you travel, you know, you appreciate like the exchange, even simple things like exchanging money in an airport. You're like, it's like this is very value extractive, very inefficient markets. So I think, yeah, as soon as you know, travel and talk to other you know, go to other places like here in Asia, like you really appreciate where crypto might be really useful. So
one thing you talk about, or you've tweeted about a little bit, is the idea of kind of like losing a lot or all of it as like this kind of like rite of passage in investing, and how it's important in a lot of ways to go through like some, you know, drawdown or hardship. Why is this the case, and kind of how do you think about that?
Well, because as soon as you lose money or you're not as successful, it forces you to question what went wrong.
Mm-hmm.
And hopefully you learn from that process and you'll come out of it in a better spot. I mean, ideally, you don't have to go through that traumatic experience, but I think there's a hallmark of every major successful investor, athlete, business owner, builder has gone through these near-death experiences. I think, yeah, I think if I were to do it differently, I think you should be failing. If you're not failing, it's actually a greater failure. Not taking enough risk is pretty bad. But make sure, what I'm really focused on now is doing a lot of experiments. But if I fail in those experiments, the failure is actually contained and small.
Mm-hmm.
Whereas before it was like not as much as that. But I think there is a lot of value of just understanding. And by the way, again, what is failure? Is it being liquidated? Is it losing all your money? I think that is like very clear, and that is like in your face. You have to deal with it. There's, you know, there's objectively like you've lost a lot of money. The more dangerous type of mistakes are the failures where the process was terrible, the outcome was really good.
Right.
Because those are the ones that kill you, really kill you. Long-term capital management. Great scientists, thinkers. They were perhaps very successful initially, and then they just didn't. It's like what you hear from Taleb, like these black swans, or it might be that like you were just investing in ICOs and punting all your stack, and you were flipping 2x, and great. The process was likely very terrible from a sizing, risk management perspective, what have you. But you were so successful during those 2-3, at home kind of swings that you didn't really focus on perfecting your process. And again, in this game, I think you want to be focused on perfecting your process, because the outcome you necessarily don't control, but you really do control your process. And I think you always want to be aware, especially of in that matrix of, it was a process and outcome. You can have a really good process, good outcome. Fantastic. Those are the good ones. You want to have more of those. You can have a really good process, a bad outcome, hopefully again, contained, if that happens, go back to the process, understand the outcome. Okay, what was wrong? The timing, the sizing, whatever. You can have a terrible process, a really good outcome. That's really bad. That kills you, right? Because it's a blind spot. And then you can have bad process, bad outcome. You definitely should avoid that one.
Yeah, absolutely.
But the ones that are harder to get your head around are the bad process, good outcome. Because as soon as you have a good outcome, you're like, oh, great, on to the next one. Right.
Yeah, this summer I was in the US and I kind of took up golf. And like you can like shank the golf shot, like, and it skips across the water and it goes in the hole. But that's actually like the worst thing for you because it was not the good shot.
Yeah. It's imagine climbing. You're going to Everest. Most mistakes happen on the way down. And I think if you listen to, in climbing, it's a very, you're putting yourself out there. As soon as you go above the dead zone, like a lot of things are outside your control. You have falling ice, you have other climbers, and so the analogy would be, imagine if you're really focused on getting to the top. It could be a terrible process. You could abandon all of your thinking around what makes you a good climber, of managing risk, of like making sure you survive, and you can be lucky. You might be able to summit and come down because it was beginner's luck, or it was just the perfect conditions. But if you go back and you say, holy shit, we took way too much risk. We shouldn't have gone above, like after noon. We shouldn't have pushed it. But there's a natural tendency, as in running, as in sports. It's like, no pain, no gain kind of mentality. It's like, no, just maybe go 80%, but play the long game and make sure you survive. Because you can't even be lucky if you're dead. You know what I mean?
Yeah, there's actually a good analogy there in crypto where it's like you can't make money if you have no money, or if you're in debt.
You can't even be lucky. You can't even hit the 100x or shitcoin if you're dead.
Right.
And once you totally lose your stack, it's gonna put you in a really bad spot. So insulate yourself early on.
I in preparation for this interview, I looked up some of your tweets from I think they were all from 2021.
Oh boy.
That I'm curious about your opinion on, and how it's relevant, or if it's still relevant. The first one is Ethereum has already flipped BTC, and maybe you can talk a little bit about the context to why you said that and how you think about it now.
At that time, Ethereum was, DeFi was in raging, kind of DeFi summer. My point there was, from a human capital standpoint, Ethereum has flipped it. From a transactions usability standpoint, I generally think it's just more interesting of blockchains are going to be used for their asset ledgers. They're going to be used for different applications, a new operating system. And so I think at the time we didn't have all this new resurgence and activity in Bitcoin L2s and just using Bitcoin network for other things other than a store of value. But that was my point around then, that Ethereum is just far more interesting, far more, because it is attracting more developers. There's more activity. There's more builders there. So what's bigger, the market cap of gold or the internet? One is orders of magnitude bigger. The internet, the settlement value of the internet, it's huge. That was my point. And I think it really predicated on human capital.
Right. And then now, interestingly, I think you gave Solana an 80% chance of flipping Ethereum. Do you think Solana has flipped Ethereum already in some sense? And if so, what about Solana flipping BTC in terms of the same dynamic?
Yeah. I think the the flippening will happen faster than most people think around Solana and versus Ethereum.
Wow.
I mean, Ethereum is what, 300 billion as today. Solana is 180 maybe billion. So there's a $200 billion gap in fully diluted terms. And I think that converges really quickly. Why? Because I think finally we're entering the consumer application phase of crypto. Like, we've spent the last decade building infrastructure. Now, but it was unclear then to really, like, every team tells you that they have the best tech, the highest TPS. We can't agree on what that is, but everyone will tell you that, as opposed to we're making certain trade-offs. But I do think if you invert and you say, okay, where will most of the usage happen on these chains? And I think you're already seeing that in Solana in many ways. Like, where has been marginally, Solana still, like Ethereum as a whole, like L1 and all the other L2s, kind of like that cluster, has more developers. It has more TVL. It has had that first mover advantage, which I think first mover advantages are generally overrated. I think it has been hard to understand what the moats have been, but you're starting to see early indications of Solana really hitting escape velocity. Helium, as an example. Like, I'm quite excited about Deepin because Deepin makes crypto incredibly relatable. Like, when I go explain crypto to people that don't care about crypto, it's just been historically really, really hard to get them interested. If you haven't traveled, selling them this idea of digital gold, of how the internet works, like, they don't understand these things. It's like engineering, things that only engineers and us hobbyists care about. But you can't argue when you tell people, hey, here's a phone. It's your same phone. It's just a company that's called Helium that costs a fraction of the cost of your AT&T, Verizon, or Sprint. Well, why wouldn't you use it if it's the same service?
The value proposition is intrinsic.
Like, you can't refute it. Similarly, Andrina, like, they're building just a wireless, like a Wi-Fi for your house, right? Broadband. They're gonna charge $20, while AT&T charges 100 or Comcast charges 100. Like, feature parity. There is like no reason. Again, it's so obvious.
It doesn't have to exist. It doesn't have to be a crypto product to prove its value.
It's using crypto properties like the deepen component, coordination component, hardware, whatever, to get to that state. But I think generally, like, that's why I think and by the way, you're seeing most of these projects be built on Solana. And the last thing I'll say is, like, we've ideologically stuck to certain concepts in sort of this L1 smart contracting platforms, is like the scalability trilemma. You can have security, you can have decentralization or throughput, and you can sort of make these trade-offs. The more, my view is, it's actually once you reach a certain threshold of sufficient decentralization and security, which, by the way, Solana has and other chains have, the most important thing is throughput, because throughput really dictates the user experience. And if the user experience is just better in Solana, and it's integrated, like, you don't, then that's gonna create more demand for block space. That's gonna incentivize validators because they're gonna make more money off of MEV and fees, and then that invites more developers, and then that creates better products. And so that flywheel I see it just working more clearly in Solana today and going forward than in a very fragmented state in Ethereum. Like, the experience is, if you're a user, you have to think about USDC on 10 different L2s, and you have to use bridges, which, by the way, degrades the security, because the security of the weakest link, a bridge, is not very secure. So you're not really trusting the L1 security, the security of the L1. You're trusting the security of a multisig, which is an L2, and the bridge. That's less security than Solana, right? So the security argument doesn't hold in this fragmented construct versus an integrated in Solana. And then when you think about from a user standpoint, like, more users they're gonna go where it's just easier to transact. And once you have, and Deepin's so important in that onboarding, and stablecoins and Deepin's so important because once you have a Helium mobile plan, you're gonna have a Solana wallet, you're gonna have Solana loaded there, you're gonna have USDC there. That's it, right? And more Deepin projects are gonna use Solana. And so I certainly hasn't flipped yet, but if you do this experiment of how would I redraw my portfolio from scratch, it would be, I actually don't own any Ethereum.
Wow.
I have, to be fair, I have more exposure to Ethereum than Solana just because of my venture investments and legacy investments. And I think it's not a one chain to rule them all. I think there is a place for Ethereum. There's a ton of smart people. I would never fade Ethereum, but I get more excited because kind of like the email moment of this industry, where it's finally very clear why blockchains matter, is going to happen in Solana.
Right. The last question I have is, this is something you said in 2021, and I want to know if it still holds true to you today, is if you're here today in crypto, you're an early adopter. Embrace it. Does that still hold true in 2024?
Oh, yeah. I think we're actually earlier now.
That's crazy.
Because finally, like, you start seeing, again, these use cases where you're like, I guess everyone in their crypto journey, you may relate to this. You open this door and you see the future and you're like, wow. And then you want to pull everyone in because it's just a better way to do things, trust minimized and all the implications around that. But now I'm like, the more I learn about these different use cases that I didn't envision, 5 years ago, we're trying things that were, they're working now that were tried back then. But there's something about just seeing them work that makes me just of this opinion that we're earlier. And I think we, as Bill Gates, I think it was that said it, like, we grossly overestimate what we do in 2 years and underestimate what we do in 10. We're kind of at that point, but the internet really took 20, 30 years to like really hit stride where it is now. And I just am amazed by the founders and their vision and all the different use cases that like are being experimented and finally like kind of working, because you don't have that deficit of infrastructure. Now you have an excess demand, you have an excess supply of block space, not enough demand, but we're kind of hitting that point now. And so I think I'm quite early, and I don't know if you feel this way, but I think as a generation, like, there's clear problems. There's degrading trust in institutions, and that's across many different institutions, and COVID really brought that to light. Political elections, like this year is the year with most political elections across the world. I think people really feel disenfranchised. Global inequality has gone up because while the general like quality of life for people has gone up because technology has created abundance and lowered the cost of, it's very disinflationary, it's also very unequal. So like the wealth creation on the internet is really concentrated. So it's a bit of like, I think from that standpoint, I think crypto really restores an element of a kind of anti-gravitational pull around the centralization aspect, which is very unequal. And if you think about AI, I mean, yeah, AI can be even way more unequal in concentration of people that have the data, that have the resources to train models, and cost like 300 billion to do, or trillion.
Right.
And so that's what I mean. I'm now making more relationships on how crypto fits into the equation on many other things that perhaps in 2012 it was just Bitcoin. It was just an escape hatch for monetary, irresponsibility. Now it's, and then in 2021, DeFi is working. You're like, oh wow, like, yeah, this could really impact the financial system. That's huge. But now I'm relating it to more and more things that I think future generations will look back and say, like, this was like almost like turn of the century, like 20th century, where people went from horse tracks to cars and airplanes. Will be like, yeah, this was like a part of the mega trend of the internet connecting us and better coordination, but taking it on a whole new level that I think is just really exciting.
Right. So the scope has expanded.
The scope has expanded very much, and we're only scratching the surface, because historically it's been what is called skeuomorphic, like copying what has been working in the traditional world in finance or whatever with crypto properties. We haven't even begun thinking about what is uniquely enabled by crypto, but I think that will come later. And it's, right. I don't know what that is. If I knew, I'd be building, but I'm an investor. Excellent. Because my imagination is not that great.
Santiago, thanks so much for being here. Really appreciate your time.
Jack, thank you. I mean, you do so much good work, and so I'm happy for the invite. When you said it, I was like, no brainer,
Fantastic.
Thank you.
Thanks.